So welcome back. So this is the second part of the previous video. The video we did on risk management. So the last video we were having a conversation about risk management and how that you can stick to your plan and stick to what your system gives you to trade. And having that mindset of knowing that you don't need to over leverage or over trade or use big lot size or over risks. We're talking about risk management, how the risk management, if you use the proper risk management, we're saying something about how the risk management is like a preservative of your account, is what you use, the system you use to actually preserve your account from being blown. Because once you lose a trade or once you lose your account, it tends not to give you opportunity or give you the room to actually trade for the next day. There's always another trading day. You actually don't need to trade and blow your account because you are trying to make it one time. Right? Risk management actually gives you the edge and helps you to stay in the game for the longest, because that's actually what helps people become successful, if they can stay for the longest. So I was saying something about risk management, and then I was explaining something about risk management being a safe net or a preservative for people's account and what can help you stay in the market for the longest. When we're now giving certain examples of certain things you can use to preserve or practice proper risk management. So I said something about risk to reward ratio that we explained. That was saying at least a strategy that you are having should allow you to at least have 1:2 ratio. What this means is that your strategy should be able to allow you, if you are risking $10, you are supposed to be at least getting $20. Getting times 2 of this. That means risking $10 to get $20. Your strategy should at least give you this level. For risking $100, you are supposed to be able to make $20. Right? Your strategy should at least give you this leveraging, this advantage, right? So any strategy that you have that is telling you that if you risk $1, you get $1. On the long run, you won't actually be in the game, because if you notice, if you actually follow the previous video we did, I was saying something about if maybe your system is allowing you to maybe risk, your system is allowing you to risk $10, or you made up your mind that your risk per trade will be maybe $10 of your account, and you're having $100. Though I explained it at length. So if you have actually not watched that video, if you have not watched that video, you should try to go and play the video and watch. I think it will be of help to you. So now, moving to the next thing that I actually believe can actually help you is what I call stop loss. Okay, we said something about stop losses, right? Stop losses. Now let me explain how you can make use of stop losses to reduce or manage your risks. Now, stop losses. You remember I made mention of something, how that I told you the textbooks will tell you to risk 1% to 2% of your account on every trade. 1% to 2% of your account on every trade. Now, this 1% or 2% that you are risking per trade just means that this amount that you are risking should be the determining factor, the determining factor of where your stop loss is supposed to be. Sorry for the word. So it's supposed to be what will determine where your SL is supposed to be, where your stop loss is supposed to be. The percentage that you are risking should be what should determine that. Now, let me explain. If, for instance, you are having $100 account, and you said you want to risk 2%, which is 2% of $100. Let's say 2% of $100, it should be 100, right? Divided by 100 times 2, right? So if you do this math well, this is supposed to amount to $2 equals to. It's supposed to be $2, right? This is what your answer should be, right? So if your answer is $2, that means for every trade you are trading, you are supposed to risk what? You are supposed to risk $2, right? You are supposed to risk what? $2 for every trade. Now, your stop loss should not exceed this. Maybe if you have calculated your pips and the likes, right? After calculating your pips, I did a video on calculating pips, right, on synthetic index, so you can just go and watch it. So now, if you are supposed to make use of risking $2 per trade, and then you now see a setup, Your stop loss, now this is like the tool make use of stop loss on the trade. Your stop loss should not be, let me say this is, let's just put it like 2, let's put it like as 2 like this. And we said a strategy should at least allow you to get 1:2, that is 1:2. Let's just say we are doing something like this, 1:2. That means you are risking $2 to get, let's just say $4. All right, let's just say it's $4 you want to get. Now, if your setup, the setup you are getting is let's just say something like this. We are seeing a setup, for instance, like this. All right, let's just say, for instance, this, let's just use 20 as 2%, depending on the account, right? Let's just say this is 2, and then we are aiming at making 1:2 of what we are risking. Now, if where you are supposed to put your stop loss, maybe from your strategy or the system you are using to trade, is not amounting to, or is more than $2, you should reduce your lot size, right? It should amount to $2, not more than $2, right? By so doing, you can actually now trade your account for the longest. If you want to risk 2% of your account, that's $2 of $100, for instance. Any trade you want to take, your stop loss should not be more than $2. Your stop loss should not be more than $2. If you see that, okay, maybe the initial lot size they are using, let me say you are making use of 0.5, and you notice from that trade where you are supposed to put your stop loss, where your strategy is telling your stop loss is supposed to be, is more than $2, you should then reduce your lot size, right? You should reduce your lot size. I made a video on lot size when I was speaking on pips and stuff like that. I made mention of lot sizing, so you can just go back to view to watch that video to get insight on what I'm saying. So you should reduce your lot size to actually give you what you want, to actually amount to $2. Your SL should amount to $2, not more than. So if you can stick to it, if you say you want to risk 3%, same thing. After finding out how many percent, after calculating, they have pips calculator, you have percentage calculators you can use to actually calculate your percentages, or you can just do it manually the way we just did now, right? The way we did just now. So you can actually do it manually too, right? So I believe stop loss is too, you can actually make use of it to actually reduce or manage your risks properly. There are other ways. We have ways of trailing profit. That is when you are in a trade and then you are making profit. For instance, let me say I'm trying to trade this swing, and then maybe I place my trade from here. I'm on trade here, and then I notice that the market is giving sequential higher highs and higher lows, and I place my stop loss here, and I notice that, okay, this market will continue because it's an uptrend. So instead of closing this market, my stop loss now, which was here, I can decide to either first shift it to break even. After it's in break even, if the market makes new higher highs, if the market should make something like this, if the market should make higher highs, higher lows, if I notice, I enter the market from this place, and then the moment the market makes a new high, if I want to trail, once the market starts going up and breaks this previous level, I'll shift my stop loss from this down point. I'll take it here. Once the market makes a new high, moves up, breaks this previous point, I'll shift my stop loss to this point. This is me trailing my profit. I was supposed to just go out here, but because I'm trailing, I will leave it. Once it goes break the previous high, makes a new high, I will then shift my stop loss to the previous low. This one is higher highs, higher lows, higher. I will shift it. That's how I will continue to trail until when the trend wants to change. Until when maybe I see a change of character, right? Or I see a market giving structural changes, maybe giving inverter pattern, chart pattern. That's when I will now decide to say, okay, let me go out now. You can actually still manage your risks like that, right? So it will not be risk-free trade. You are on a trade, but you are not risking much. You are not risking anything. First shifting to break even, and then continuing following the sequential movement, the higher high, the higher lows, shifting your stop loss to the lows and moving, right? So that's one other way. I think I will actually stop here, and we'll call it the end of this particular class on risk management, right? So there are other areas of risk management, right? There are other areas. So I would also advise you guys to just stay tuned while the next video, till when next I'll send the next video. The next video will be talking more on chart patterns. Chart pattern is one area of the market I actually love a lot. I love it a lot, even if I don't use it basically in all my trades. But with the knowledge of chart patterns, you can actually have higher edge to hold market for longer time, to hold trade, for a long period of time. You can be on the market and have confidence to stay in the market because you are expecting the market to respect a particular chart pattern. Right now, in the next video, I'll dive into chart patterns. We'll talk on some major chart patterns I make use of for my own personal trades. Right, I don't make use of all. I made a statement earlier, but I don't make use of all. I make use of some. There are some I love to make use of. So in the next video, I'll talk more on chart pattern. So till when next we meet, I continue to remain affair. I stay safe and God bless.